Let's get your home loan rate down. We understand how important managing cash flow is for investors. That's why talking to one of our brokers can help you find the best loan options and a better rate. Your Finny loan expert will assess your loan and quickly spot a better option if it's out there. With access to over 70 lenders and a wide range of products, you're sure to get the lowest available rate in the market. Stop worrying about your repayments now and take charge of your financial freedom. Contact a Finny mortgage specialist today on 02 8866 2444 or visit our website at www.finny.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. Welcome back to a brand new episode of the Smart Property Investment Show. I'm Grace Ormsby. Pleased to be chatting with yet another investor telling their story today. Aman Sethi, welcome to the show.
Thank you for having me, Grace. I'm glad to be here.
Aman, when I first heard about your story, I was like, we need to talk to this guy. You have got an absolutely insane portfolio from my perspective, and I don't want to be the one to give away what is in that portfolio. So before we go into the whys, the why nots, the how you got here, can you briefly outline for our listeners what your portfolio looks like as of today?
Sure. Look, our portfolio overall, we've got 8 properties in our portfolio at the moment, approximately 10 million in value. And so 2 of those properties are more for residential and business purposes. And then 6 of the properties are purely investment properties that we've bought prominently over the last 3 years, essentially. And yeah, so that's what it looks like at the moment.
Pretty quick turnaround to have such a big portfolio. When did you first become interested in property investing, Aman?
Property investing, I guess I always had an interest from early on, in terms of I used to see a lot of, say, our friends or family members building some properties, and they used to talk about the success that they had. And whoever I've interacted with, I've always come across people that have had success in property investing. And, it's, I'm sure that there are some where, it doesn't quite go the way that they planned as well. But just from my experience, the majority of people that I interact with, they've always said positive things. And, so from an early age, I always had this feeling that, from an investment point of view, property was the vehicle that I wanted to use. And when the time was right and when we had the means and the capability, essentially.
I'd like that you bring up having the means, because obviously not everyone can go out and buy $6 to $8 million worth of property in a 3-year period. What do you do, Aman?
Yes, so I run my own business. So we have 2 business arms. So one is Jigs Consulting, which is assisting people with their job search, essentially. A lot of new migrants, a lot of people that have been here for a while as well and just looking for their next opportunity. And then the other arm of our business is Jigs Migration, which is anything to do with immigration services, permanent residency pathways, graduate visas, business sponsorships. So, the whole remit around the immigration services, essentially.
So it's obviously been quite successful for you, those business ventures, to be able to then take some of that capital and look, towards a property portfolio.
Yeah, definitely. I mean, that's, we've grown over the last, approximately 7 years, slow and steady until then. And that's all, it's taken off through word of mouth and grown organically to a large extent till now. And so we've really, enjoyed that. And yes, 100% that has helped in terms of, growing the portfolio maybe a little bit faster than normally would allow. But I think, from a property investment point of view, I think most people, they would be able to grow and at least get into the property investing side. It's just, how quickly you scale it, of course, will depend on other factors, of course.
So let's rewind right back to the beginning then and look possibly to your first property purchase. When was it and what were you buying for?
Yeah. So the first investment property that we got was in Adelaide. So we bought that remotely through InvestorKit and Arjun, who've actually helped us with basically all of our investment property purchases till now. And that's been fantastic. And the budget that we had in that for that, we were looking at around about the 500 to 550 range initially for the first one. But we did end up stretching the budget a little bit by 30, 40,000 to get that right property at the end of the day.
So why Adelaide? And I'm guessing if this was remote, was this back in the throngs of COVID?
Yeah, I think this was probably just before COVID.
Okay.
Kicked off. So maybe a couple of months before COVID set in is when we settled on this one. So yeah, it was prior to that timing wise. And look, why Adelaide? I always had a feeling, initially my initial thoughts were that investing interstate. So we're based in Sydney ourselves, but I've known that Sydney, the rentals that you get in relation to the property that you're purchasing, so the yield essentially is not quite as good as some of the other areas like Brisbane and Adelaide and regional centers at times. So I always, was of the belief that I need to invest interstate to allow me to not only buy the first property, but then to buy subsequent properties and also have the servicing and the cash flow from a long-term perspective. And Adelaide was the area at that time which, InvestorKit recommended, and based on the data and the statistics and analysis that they did. And that's why we went with that, which has, worked out really well.
I can tell that you know what you're talking about and you've got a lot of experience, knowledge and research backing you, and you've still obviously gone down the buyer's agent route. What was your, motivation for really taking the plunge when it came to, fast tracking a property portfolio, really, because you've made so many purchases within a very short space of time? What is your motivation for building that wealth through property?
Yep. So the fast tracking question, I think, I've always had the belief that, we would purchase whenever budget and finance and buffers allowed us to purchase. And also, I've always, had the belief that seeing property time is critical. And therefore, the faster you can, build that base and build that portfolio, the more you're going to allow yourself that time for the value to say double over, say 10 years, which is often used as a benchmark. But, the longer you take to build it, obviously, the slower the compounding is essentially. So, and that's the philosophy behind why we went relatively fast, but also, like I said, everyone has different kind of goals and what they can achieve. So I think it's not for everyone to build that fast, but it just depends on your personal scenario, I would say.
So talk us through that first purchase, and you obviously stretched out your budget. Was that because there was something that was really ideal?
Yeah, definitely. I think, initially, especially for the first one, there's always a bit of nerves and, you're doing something that's relatively new and doing it interstate, sight unseen. So there's obviously that different level of, scrutiny that you put on everything, essentially. So we wanted to make sure that we got a property that basically InvestorKit approved of. So we had that comfort. We really liked personally. So we had our personal comfort that, there was everything that we wanted was getting ticked in that property. And then thirdly, of course, that, the banks and the funding aspect was comfortable as well, including the yield and so forth. So, we got, like I said, so for those reasons, we were okay. We had the ability to stretch a little bit, and, that's why we stretched and got that property that we were really comfortable with, and it's performed really well, which has been fantastic.
So what were the specs of that property?
Yeah. So we bought it for 590,000. And we rented it out for, I think at that time, it was around $525 per week, approximately.
Yeah, okay.
And it was a 5-bedroom, 2-bathroom house, about 600 square meters plus, I think. And it was in a, south of Adelaide, beachside suburb, and really nice area. We've visited since then, obviously. So, yeah, we're really, happy with that purchase.
So what is that, if you don't mind me asking? Have you done a valuation on it recently?
Yes, we have. So it's basically in the 800s now. So it's performed well. Yes.
So you obviously were off to a pretty great start, and then you've only gone, rinse and repeated the same process throughout your investment journey since then. We're going to take a quick break though. We'll be back in just a moment with more from Aman Sethi. Welcome back to this episode of the Smart Property Investment Show. I am joined by Aman Sethi, who owns a fair few properties. We've only really talked through the first pure investment property that he did purchase. Aman, you obviously had great success with that first one. It obviously got the cogs turning, the wheels in motion for you thinking, this is great. I'm going to start, investing in property. Then obviously COVID would have hit fairly soon after that first purchase for you. Did that change anything?
Yeah, definitely. Look, when COVID hit, at that time we were planning to go with the next purchase at that stage as well. And we were just looking at the finances and how we can manage it. And then COVID happened. Look, it did put the brakes on a little bit, for maybe, I guess, 4 or 5 months approximately, as, even the business that we're in terms of the job side as well. And that's obviously gets impacted directly when something like COVID happens.
Yeah.
So,
I mean, immigration and then jobs, like both of those things, it probably wasn't the nicest time for you.
Exactly. So we took about 3 to 4 months to just see where the landscape was, and then after COVID hit, I think maybe 4 or 5 months later we started seeing that the job market was actually picking up and the economy was actually going in the right direction and so forth, and then that's when we restarted and pressed the go button again at that time.
Did you have any hesitations just with, I guess, what had been a little bit of an iffy market at that point? There'd been a lot of predictions that the market was going to drop by 30%, that people weren't going to be able to pay their mortgages, that tenants weren't going to be able to pay their rent. Did that scare you at all?
No, not at that time. I felt that we, again, having seen the performance of the first property by then over a period of a few months, we were confident in the system and the process that we'd gotten used to, essentially. And we felt that, even if there was a short-term decrease of say 5% or 10% in the properties, like we're not intending to flip the properties. So even a short-term reduction, we knew that long-term it would bounce back, much more significantly than that. So so that was the thinking behind it. So we didn't really stop us from, proceeding forward at that stage.
Playing the long game, Aman. So talk us through making that decision and taking on that second purchase.
Sure. So, look, the second purchase was I would say it's probably the best purchase that we've had so far. It's a property based in Brisbane. Again, 5-bedroom property, quite significant, spread over 3 levels. And, the reason I really like this property is, I guess, the numbers as well. We got it for just under 1.2 million. We were lucky enough to get it rented out at 1,100 per week. And which is, rare at those kind of price ranges.
Yeah.
Getting that level of yield. And since then, the value's kind of really gone significantly higher, somewhere between, 1.6 to 1.7 conservatively at the moment. So it's kind of, from both a rental yield and a capital growth perspective, I think it's been, the one that has performed significantly for us for sure.
Not many people, when they're investing in property, are willing to drop more than $1 million on something that is purely an investment vehicle. Was there any trepidation there? How did you decide that was the right move for you next?
Yeah. So, look, that trepidation, I think, was there from the first one, of course, where we had the slightly lower budget in mind. And then again, we got that confidence. So, from long-term perspective, though, we would always, for personally, I never, envisaged myself having a 25 to 30 property portfolio, like the day-to-day maintenance of that and what's required. I knew that it just wouldn't fit in for us in terms of a lifestyle and the amount of effort that we would then need to look at to maintain that sort of portfolio. So we've always come with the belief that, it doesn't really matter how many properties we have. It's more the overall value of the properties. And so, since that first purchase, we've always, stuck around that $1 million mark for most of the other purchases, give or take, essentially.
I like that ethos because I do feel like, and there's nothing wrong with any processes that we hear about on this show, but you obviously knew that having, X amount of properties wouldn't really fit in with the lifestyle, with the fact that you're running this very successful business. And so taking that different approach, it's really, really cool to hear about. So thank you for sharing.
No problems.
So that second purchase obviously went without a hitch. Was that around, I'm just trying to work out timelines, August, September of 2020?
I think it was probably I think the first purchase was probably around that, because COVID hit, I think, early 2021. So The first purchase was around, November, December 2020. And then this purchase was probably around, I think, August, September of 2021.
Yeah. Okay. So then, yeah, obviously another successful one. How did you go about financing this second purchase? I'm assuming that the first one was a little bit of equity and then a deposit.
Yeah.
How did you go about the second one?
Yeah, I mean, the first purchase, so we did have a principal place of residence that we bought, obviously, where we live. So we were able to also use the equity in that initially. So I think the first purchase, we probably didn't use any of our cash. So we had some cash, left over.
Mm-hmm.
And then second purchase, we used a mixture of cash and then, of course, a bit more equity from our principal place of residence, as well as the investment property, which had grown by that time. And, through those three combinations, we were able to put together the deposit for the second one, basically.
How handy has it been for you to be able to draw money out of that principal place of residence? Because I do feel like so many people are really reluctant and worried about doing that. They sort of feel like they've missed the boat if they're relying on the principal place of residence to then fund other purchases.
Yeah, look, really important from our perspective. And, so in terms of, it helps you to get into the next one faster and faster. And, from our perspective, the quicker you get in and the quicker you can build, as you know already, is important, is the way that we look at it anyway. So yeah, we had no hesitation in terms of using, our principal place of residence. And the view that we see is that property is, if you look at the last, I don't know how many years, but it's always been a very stable vehicle, essentially. And that's why, we have that confidence that in terms of the value, even, yes, there might be ups and downs and so forth, but we don't envisage any major catastrophe. Of course, we might be wrong, but, from what we've seen so far, it doesn't seem to be a risk that is significant enough to stop us from, doing this strategy.
All right. So let's move on then to the third and the fourth property purchases, Zaman. Talk us through what they look like. Did you stick with places you'd invested before, or did you try something new again?
Yeah, look, the third one, again, we did, in Brisbane, slightly different part of Brisbane. This was more on the east side, whereas the second one was more in the north. And then the fourth one, we actually went to regional New South Wales. So that one was a little bit different in terms of location. And we started, we went towards regional New South Wales, more towards Canberra area. And that was the fourth purchase that we made.
And both of those, again, around that $1 million mark.
Yeah, they are. The Brisbane one, the third purchase, is slightly less than $1 million. So that was around 850 to 870, I think, somewhere around that range. And then the regional New South Wales one, that was around 1.2-ish, just over.
Mm-hmm. And how have they been looking as far as rents and capital gains have gone?
Yeah, rents, again, they're quite strong. Obviously, the 851 initially rented at about 700 or so. It's now gone up into the, mid to high 800s. And the regional New South Wales one was rented for about $1,000 per week with the 1.27 purchase price approximately. And, that's gone up as well. It's gone up by about $50 to $75 since that time. And in terms of capital growth, look, the first three purchases that we've had have had, significant capital growth because, we bought them kind of pre-COVID or towards the start of COVID. So we were able to catch that, significant 30 to 50% jump that happened in the market. And the more recent purchases are a little bit more solid and as per the normal, kind of growth trajectories that we see. But, the first three properties that we bought, I think really we hit the market at the right time and we're able to really utilize that capital growth boom that happened during COVID, essentially.
For sure. So you would have pulled then a fair bit of equity from all three of those purchases.
Right.
And there's obviously been purchases since then. Are you at a point now, and we're going to talk about that fifth and sixth one soon, but are you at a point now where you are kind of slowing just because maybe you have got to your bandwidth ability when it comes to financing?
100%, yes. So we're pretty much, at bandwidth in terms of, the residential properties that we wanted to buy to build the foundation. So we've kind of hit that goal and we're not really looking in that side now. We will plan to transition across to maybe the commercial property space, but that's something that maybe is still, 12, 18, 24 months away until we have enough of a strong financial position to be able to buy the type of property that we want on the commercial side. So yeah, we're still probably 18 to 24 months away from, that next phase of our journey.
For sure. Well, moving back again, so we've gone through the first four purchases. Let's go to the fifth and the sixth now. What were they like for you? And when did they really take place?
Yeah, so they've taken place, I guess, in the last, 12 to 18 months, I guess. And the fifth purchase was another property in Adelaide, a little bit closer to the CBD, basically, again, beachside suburb again. And that was the fifth purchase in terms of the numbers. Similar, so about 1.2-ish, and the rent on that one was approximately about 900 or so slightly lower yield than some of our other properties, but it's got good prospects. And then the most recent purchase was actually in regional Victoria, in a beach town suburb, and that one we have purchased for about 900, and the rent, it was 700 when we bought it, but it's just increased by a little bit in recent times. And that's a regional Victoria purchase basically.
Mm-hmm. So how big is your portfolio in monetary terms at the moment?
Overall, across the 8 properties, it's approximately 10 million at the moment.
Yeah, so that's 6 purchases quite recently, plus your principal place of residence, and then there's one other one sitting somewhere.
Yeah, there's another apartment that we have as well. Yeah, yes.
Yeah,
yes.
So pretty sizable in a pretty short space of time, Aman. Do you ever look back and think, wow, look what we've been able to do?
Yeah, it's funny you say that. I mean, we don't really. I think when you're doing it and when you're going through it, you're just kind of focusing on the process and not really looking at it from, that perspective necessarily. And, anyway, I mean, everyone's different, but from our perspective, yeah, I do look at it, but I'm not really saying wow at the moment yet. I'm just saying that, yes, this is still part of the journey. And yes, we've done the first part of what we wanted to do from a property side, and the other parts will hopefully follow in the next couple of years. And so I think in a sense, I'm still in the process, and, I haven't retired yet. So it's, I'm not looking backwards yet from that perspective.
Just before we go to a break, how much equity growth have you also managed to achieve in the last couple of years? Because I think just it is worth noting, because we've seen such upheaval with pricing over COVID. We saw prices decrease initially, then we saw them jump in a lot of places, and we've seen them sort of plateau back down again. And they're sort of growing again, but not as fast as they were. Have you managed to achieve some decent equity growth over that time period that's stable?
Yeah, it's more stable in recent times, like you said, because we had that, the drop off about, 5 to 10 to 12% across different regions. And now it seems to have come back into where, we're back to where the peak was. And, projections are that obviously it will increase, but, who knows what will happen next year, but hoping for the best. But yeah, we've kind of stayed stable. So it's not something we focus on too much, to be honest with you, because like I said, we look at it more from a 10-year plan as opposed to a, year-on-year plan. And from that perspective, it's not something that we're monthly or quarterly trying to analyze it, because it's not something we can control from a broad market perspective. And also now that the rents have gone up more, so our holding costs, are getting towards a stage where even if the property is not growing, we're still able to hold it due to the rental growth. And then we understand that there will be ups and downs as with anything, as with all investment tools. And yeah, but that's a long-winded answer. The short answer is, yeah, they've been pretty stable. So there's nothing that's kind of gone, I'm really worried that this has gone down by 25%. And, so there hasn't been any sort of drop off from that perspective. All of the assets that we have, even if there's been some marginal drop off, it hasn't been significant.
Sounds like a pretty comfortable position to be in, all things considered, Aman. I want to come back to your 10-year plan after the break, but before we get there, positively geared, negatively geared, neutrally geared, a mixture of all three. How do you perceive the gearing of the portfolios and the tax settings, I guess, of them?
Yeah, look, it's always this bit of a tricky question, because some people, when they look at it, they talk about interest-only loans. Some people talk about principal and interest, and there's different ways of formulating it. I guess to put it simply, our mindset has, always been that, look, we're comfortable in terms of having some holding cost attached to the portfolio, and you could put that in the negatively geared category, and then obviously trying to minimize those holding costs as much as possible through, obviously utilizing the various channels that we have available. So yeah, it's always been that, we were, using depreciation or, like you said, the tax implications. So yeah, overall, I would say we don't have a positively geared strategy as such. Our strategy has been more focused on getting the right assets that's going to, have significant capital growth over the next 5 to 10 years, basically.
Well, we'll go to another break there, but don't go away. We've got plenty more to hear from Aman Sethi just after the break. See you on the other side. Welcome back to this episode of the Smart Property Investment Show. I am joined by Aman Sethi, who has a fair few properties in his portfolio. Sounds like there's still more to come, Aman. You were talking before the break about having a 10-year plan. Can you outline, exactly, I guess, the trajectory of your portfolio over that time and what you're hoping to get from putting this portfolio together?
Sure. Yeah, I mean, again, from a very broad perspective, I guess, when I talk about, say, the 10-year plan, it's based on the old analogy that, property usually doubles every, 10 years conservatively. And from that perspective, that's the plan that, I'm referring to in a broad sense that, that's what we were hoping for from our residential portfolio. From a commercial point of view, I think that's very important from a cash flow perspective. It's not something that, we've deep dived into so far. So, something that probably, more education and more specialists and probably going back to InvestorKit again for those purchases. But I think from a cash flow perspective, it'll be important to have, those commercial pieces or maybe even, some unit blocks as part of the mix for the diversification and long-term cash flow elements as well.
You did say earlier on that you couldn't see yourself as one of those people with 25 to 30 properties or beyond. What do you think is kind of a manageable amount for you? Or will it be that you take on, unit blocks and build it up that way and just don't see it as, I guess, separate properties in themselves?
Yeah, look, I mean, I'll be honest with you, I don't probably have the answer to that at the moment. But my plan is not to have 15, 20 properties overall. So even with the commercial, what we would probably be thinking, and, this may change, but at the moment we're thinking of buying, one or two significant commercial properties and then having that what they're made up of and what they look like is obviously a little bit far away at the moment, but definitely still looking at keeping things as limited in terms of the actual number of properties as much as we can.
I'm really looking forward to hearing the update episodes with you, Aman, down the track, because I feel like there is plenty more to come in this journey. What is your ultimate end goal of creating this wealth, creating a property portfolio? Is it to retire early? Is it to, let you put more money into your business? Because I feel like business is booming for you there too. What are you hoping to kind of achieve?
Yeah, it's a funny question. I was telling someone this the other day that initially, when I was in my 20s, it's always a case of that, I want to build something and then retire and relax and take it easy. But now that, my thinking's probably changed now over the last, 3 or 4 years, and because we're enjoying what we do and the whole journey has been quite an enjoyable experience. Like even if we get to the stage where, we can retire, we probably still wouldn't retire per se. We would still continue to do what we do because it's, something that's enjoyable and something that's adding value across the board, across, multiple layers. So, I think the long-term goal or objective now is to just have those options available on the table and, have that freedom to make, choices that we want to make essentially. But yeah, I would say, retirement specifically is probably off the table for a little bit now, for sure.
You say it's off the table, but that's obviously by choice. And it's got to be a nice position for you to be in, Aman, to be able to think, actually, maybe that's not what I want to do. I've got so many options ahead of me and I can choose any of them when the time comes.
Yeah, definitely. It's good to have that feeling. And look, we're probably not there yet, obviously, but we with the plan that we have in place, we might be there in the next 5 to 10 years potentially. And it'll be good to have that. I guess financial freedom is the word that gets used quite often. So yeah, it'll be good to have those choices in the future, hopefully.
How much of your week or your month are you dedicating to your property portfolio or thinking about it or working on it or managing things? Does it take that much time?
Not really. Initially, when you first, purchase your first property, you will feel like, I mean, I felt like, yes, this was a time-consuming exercise, because what happens is initially when you get a new tenant, the dishwasher breaks down, or there's multiple minor items that come up as a new tenant walks in, and so it felt like, look, this might be a bit of a hands-on, high time requirement exercise. But what happens is usually after 3 or 4 months is once the tenant's settled in, then you don't really hear from them until if there's something significant that might happen once a year or maybe twice a year maximum. And from that perspective, from now that the properties that most of them that we have, they've been, 6 months plus essentially. So there's not much requirement from a week-to-week or day-to-day management side anymore.
What have been your biggest learnings over the last little while and taking on a fair few properties in that short space of time?
Yeah. So biggest learnings will probably be don't sweat on the small things, I guess. So look on the, look at the big picture essentially. So that's probably, one of the learnings that I've, grown accustomed to. So, sometimes, if you get too caught up about one minor aspect of one property purchase not being perfect, then you might, lose out on a great property just because of that one, small thing that you're not sure about. So I think there's never going to be anything like a perfect scenario or a perfect transaction or the perfect property. It's just about getting something that, 80 to 90% fits what you're looking for and meets the criteria, and then, making progress essentially. That would be my one takeaway.
Some great advice there, Aman. You obviously have been talking with InvestorKit about all of this, but who are the other people in your network, in your circle that you go to and talk to about property? Because I feel like none of this can happen in a vacuum, and it's much easier when you've got people either in your corner or that you can talk to and go, do you think this is a good idea?
Yeah, I mean, look, to be honest with you, InvestorKit and Arjun have been, significant in terms of that journey. And then obviously you have the other interlinking parts like your banker, of course, and then your accountant that, we've lent on our accounting team as well at KHI Partners. And so that's something that, they're obviously integral and part of the process, and you bounce it off. But, purely if you're asking me from a property, investment point of view and making those decisions and the core aspect of it, then I think, definitely Arjun, has been the integral part of that process, essentially.
Well, Aman, it's been an absolute pleasure to chat with you today. As I said just before, I feel like we're going to have to follow your journey very closely because there's some very exciting things in the works, seeing where the investment journey takes you next, the diversity path that you take, whether that's commercial, whether that's through blocks of units. Keep us posted, keep us in the loop with what's going on. Congratulations on the portfolio so far and keep up the incredible work.
No problem. And thanks for having me. Really appreciate it.
Thank you so much for taking the time. I know that you must be a very, very busy man. Lots going on. To everyone who is listening along, we hope you have enjoyed this episode. If you, like Aman, think you have a pretty good portfolio, something that's worth sharing, whether it's trials and tribulations or your successes, we would love to hear from you. editor@smartpropertyinvestment.com.au. If you like this episode, like or review us on whatever platform that you listen to your podcast on, and make sure you are subscribed to our newsletter on our website, and check us out on social media, Facebook, Twitter, LinkedIn, and Instagram. Until next episode, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Do you need help planning your next event? With over 15 years of experience, Captivate Events is the expert in event planning. Our dedicated team ensures every detail is meticulously handled. Whether it's a gala dinner, exhibition, conference or study tour, we've got you covered. We'll be there every step of the way, from conceptualisation to flawless execution, to ensure your event is a seamless experience, minimising the time and stress involved in planning. Make your next event one to remember. Visit www.captivateevents.com.au or call 02 88 66 2440 and find out how we can captivate your audience.